the Fed, they announced they raised rates by 75 basis points. Bitcoin goes up. What's your read?
Yeah, I think, just the general perception from like a high level is that, as the Fed continues to raise rates, and as this week we've gotten, a second negative GDP print, essentially the market is kind of approaching this as, well, you're getting to the point where the Fed is going to have to, kind of take their foot off the gas pedal in terms of at least the pace and aggression of how they've been raising. And they said that in their meeting as well, that they're going to kind of slow the interval between when they've been raising. The Fed doesn't meet again until September. So I think that kind of sets up somewhat of a window just from that perspective for a little bear market rally.
All right. Now we see Bitcoin's price is reclaiming the 180-week kind of trend line here. What is this showing us?
Sure. Yeah. So like the first two charts are just basic, like super high time frame trend charts. So we're looking at one weekly and one monthly. The one you brought up is the 180-week EHMA. So this is called the exponential whole moving average. It's just a moving average that has more weighing to recent price action. And so whenever it's green, as you can see, the entire chart is green. That indicates that it's in an uptrend. So this is a good kind of meme line to show you that over the long term, Bitcoin kind of only trends up because the moving average only trends up. And also, as you'll notice by looking at the chart, historically, it's kind of indicated kind of these macro bottoming or accumulation areas. And this is something that we've talked about for several months. And as we approach this, we said, hey, this is probably a pretty good time to start averaging in. And then kind of the sign of confirmation would be reclaiming that line. So for Bitcoin, one thing that I've noticed over the last 2 years, and also looking at, historical data as well, is that kind of these failed breakouts and breakdowns have been almost a better signal than actual breakouts and breakdowns in general. So like an example would be the double top of last year, right? We kind of deviated above the previous all-time high from May of last year, in November of last year. Another example would be the summer of last year when we deviated below 30K before initiating kind of that second leg up into the back half of the year. So on a similar note, if we did reclaim this, that would essentially make all the price action below that what's called a deviation. So you have kind of this all this activity that goes on below that trend. Once it breaks back below, it basically invalidates the breakdown initially. And so you can see the same thing with the 200 week as well. One thing to keep in mind, though, and very important to keep in mind, is that these candles haven't closed yet. So they'll close Sunday at 8 p.m. Eastern time. The reason I say it's important to close is if you look at the weekly, for example, you had kind of gotten this wick above the 200 week, but, we ended up closing below it at the last second. Price had dropped below before the weekly close last week. So for now, it does look good, but, just for, kind of these more high time frame kind of trend-based market participants, maybe you want to wait to see that candle close on Sunday evening to get that confirmation that it has been reclaimed. But both of these look good so far.